Okay. Good evening, everyone. I think I can absolutely say it's evening, and we're probably the last session ending and closing this lovely FinTech event. Uh, and that only means a little more pressure on all of us because we have to be the grand finale, the best session. So do your best, no other pressure. Uh, and I think we're going to try and make this very interactive. I think it's near the end of the day. But our job was done very, very, very easy by the session that just happened before. There were investors, there were panelists before us, and I kept hearing them talk about AI, right? It almost felt like they were eating into our topic of what AI is going to do in transforming lending and in transforming fintech and how we go about it. To get us all started and to make sure that all of you all are in tuned and with us, I'm going to start with very quick couple of questions, and I want you to just quickly raise your hands. How many of you have personally used an AI tool or a chatbot or something today for personal use? To write an email, to draft a text message or a WhatsApp message, personal use? Yeah, quite a lot of y'all. How many have used an AI tool at work and professionally for anything that you do today? Fantastic. So I think the overlap is quite equal. And I think what that does is our job is done because I think AI is not a future. We all are already using it. So we could have ended the session here. But I think what I'm going to really do is try to bring in all my distinguished panelists and speakers to really talk about how they have adopted and how they are using AI and a lot of the new infrastructure that's available. And is that really the early signals of what we are going to start seeing, the transformation of what financial technology is going to do in 2026 and the decade ahead? By introduction, my name is Bhavik Vasa. I absolutely would have loved to be a speaker because I run a fintech called GetVantage and an NBFC called Get Growth Capital. But I think they wanted me to be the one asking the tough questions to all of you all. So I'm going to try and play the role of asking the tougher questions to all of you. And a quick round of introduction and a much more interesting and engaging way to introduce all of us is I would like each of you to really take a minute to talk about from where you are operating in the lending value chain, the businesses that you all are operating in the ecosystem. What is the role and what is the adoption of AI that you are doing in your specific areas and fields? Anujeet, we'll start with you and then we quickly go around.
Hello. Sorry, I hope I'm audible. Yeah, hi, so I'm Anujeet. I am the Chief Risk Officer for a climate tech or a climate lending NBFC called as Ecofy, where we exclusively lend towards climate positive, a new age segment. So I think use of AI in our organization is spread across multiple use cases, but I think the single biggest use case that we see is we lend towards a lot of segments where data as such is very limited, right? Historical, empirical data is very limited. So what we've started doing is we kind of mine a lot of information, whether it's using IoT enabled stuff, electric vehicles, using information that which solar panels emit in terms of what's the kind of radiation that is saved. So a lot of these tools are being used by us now to kind of differentiate lending. And when we say differentiate lending is kind of increase our outreach towards customers as well as monitoring of assets. So I think when we look at AI, typically our use cases always have been towards underwriting when it comes to NBFCs and lending businesses. But I think AI goes much beyond that, and I think the real use case of AI is going to be towards how do we use AI post disbursement in terms of early warning signals, asset monitoring, collections, all of those. So that's I think one of the use cases that we have.
Lovely. So, an emerging sector like climate and green tech, and an emerging technology use case as well. George, quickly tell us what you do, the business you run, and how you're adopting AI.
Good evening, everyone. Okay, I am George, Managing Director of VIVA Money. So we're a pure digital personal loans lender. So and yes, we really use AI, and we started using it before I booked this conference. So like what exactly we are doing? We are first using it on the funnel side because even before we make an approval, some of the customers for some reasons may not be moving ahead the funnel and we have to reach them out. And of course, it's much more easy to do via agent calling, not human agent, but AI agent. And later on, once the loan is booked, disbursed, and the customer has any questions reaching out to us, of course, the customer service requests they are much faster managed via AI chatbots rather than by humans. Because I mean, I don't know whether you guys keep overnight shifts. We don't. Uh, so unfortunately, it's not allowed to do the same on video KYC side from a regulatory standpoint, and we have to keep like humans over there. But we are testing also the collection agents, collection AI agents, and but it's the same, you know. It's like to teach the model. It's the same story like to teach the model for moving the leads via sales. And of course, a bit of AI, but it's not pure AI per se. It's more about machine learning tools is used by the risk team.
Sure.
But again, it should be definitely run by humans on top of it to avoid very risky decisions.
Sure. But I think what we're getting away is, George, that for you from a consumer credit perspective, the top of the funnel, making sure that the right kind of leads, right kind of top of the funnel is then filtered. And is that where the largest use case of AI tool that you are using?
Not exactly. So yes, we use a bit of AI for generating some marketing campaigns, but for me, the major benefit is to push some applications because some customers are really hungry. They are moving ahead within minutes, but some, for some reason, can get frozen for hours or days. And like, sorry, we already attracted this lead and the customer already spent some time with us. Why we should just throw him away? We're trying to reach out via AI calls.
Got it. So it's more driving towards conversions and making sure that the conversion ratio is great. Superb. And I think now, Aishwarya, you work with a lot of ecosystem players, banks, PSU banks, NBFCs, powering a lot of the platform and tools they use. So tell us a little bit about what you've built and how this is kind of the requirements that you're seeing change with this whole buzzword around AI.
Hey everybody, I'm Aishwarya Jaishankar. I'm co-founder of Hyperface. We are a deeply focused credit cards platform with pay later it's as well. We work with almost 10 banks and 15 fintechs. So I think there is a sort of, what should I say, gradient playing out in here, Bhavik. Hyperface operates in three layer for banks. Better CX, how do you create great credit card programs that your users will love? Process automation, how do you simplify running a card program so intuitive and easy for the bank user? And lastly, the hyper personalization or the data assimilation leg. I would pitch that we should start back to front in terms of optimism, in terms of process automation, in terms of making life easier using AI. It might be as simple as what we all just discussed. Can AI help me write a better worded offer construct? Yeah, the adoption there I would say is pretty decent, right? In terms of data products, predictive AI banks with large data have already reached a certain maturity. So I'm not seeing any buzz around AI adding value there. For instance, the interests that I'm seeing is all around on the process side. How can I make people's lives simple? So we have launched a tool called Hyperquery. So our banks today are not doing detailed SQL. They just ask native language questions. How many customers spent in apparels last month? These are the tools that they love. Now, but as you go towards the layer of CX, right? That's where I would say there are three categories: the early adopters, the, what should I call, the cautious optimists who will say, oh, it's lovely, we should do it. The should is waiting for some market innovation to sort of lead the way. And lastly, the regulatorily very, very cautious folks. So So the CX bucket, right, launching a great variant or an AI power tool that helps you get a better credit card. Better could be a better image on the credit card, a better feature, etc. There we are seeing early adopters coming in and pushing us. You will see and hear quite a few innovative implementations from our side there. The regulatory people are very cautious, I would say, are extremely on the other end of the spectrum, where they say, Aishwarya, we need to be very cautious. I'm worried about hallucination. The bank is still not comfortable putting an AI in front of the customer. So, working with banks, which is where issuance, a lot of things happen at banks level, while we work with the other ecosystem partners. I am seeing that the early adopters are going to be leading the way, and hearteningly, we do have a handful of them. So, I am sure in a middle year range, right? 2 to 4 years, we will see AI implementations across the board with a 2, 3 banks leading the way. I think that's how this will pan out, at least for credit cards as an industry.
So what we are hearing you say is that there's already early adoption happening at the customer experience level, right? Uh, how much do we penetrate towards more deeper regulated aspects of the supply chain or the value chain of credit? You're still saying that that's
It's a trust establishment
year ahead.
exercise, that I think
Interesting.
will have to happen organically. And being ecosystem players,
Yeah.
we all have to push towards that.
Got it. So perfect, perfect dovetail into Nikhil bringing you, right? Because again, you're someone who's powering a lot of large NBFCs, incumbent NBFCs. You're powering a lot of their platform needs, etc. Uh, Tell us a little bit about how what you do and how you're seeing the landscape change with what you're offering.
Sure. So I'm Nikhil. I'm one of the founders at Finarkein. At Finarkein, we've been primarily helping enterprises and BFSI companies to publish and consume financial data, specifically around the account aggregator framework, as well as regulated consent-driven data sources. We also have done a lot of work around data intelligence recently, and our approach there has been, significantly differentiated. Where we have done co-creation, we have done IP transfer, we have done, uh, you know, uh, local deployments with large banks, NBFCs, and fintechs. So we've been at the data space for the last 6 years, and as new research has come out in the AI space, we've seen the entire spectrum of it. Today, for example, a very large, like a large bank, a traditional pre-approved base ML model is an XGBoost sort of model, right? So it's a very, we may talk a big talk when it comes to production deployed, traditional AI and ML models. They range everything from linear regression to simple boosting models at this point, and there is a healthy dose of, and rightly so, skepticism um, around how can you safely deploy it. I think everybody has crossed the utility curve.
Yeah.
There is
Yeah.
tangible,
Yeah.
demonstrable utility that is out there, and adoption is happening. But how do you do it?
Responsibly and with their
Responsibly in a compliant
so
manner.
hold that thought, Nikhil, because what he's brought up is we promised you guys that we're going to have a very real conversation. So this is not all about just saying that AI is great and it's the future and it's all going to change. It's still going to have to be tested responsibly. So hold that thought, because that's where I want to be able to talk about really that yes, there's all this hype, but really is there real true adoption happening? And so we'll come back to that. Yogi, over to you. I think again, talk us through what you do and how you've been an early adopter of AI in certain processes.
Yeah, sure. So I'm the founder of Zype. Zype is a personal loan and an embedded financing provider to consumers like ourselves. And our entire journey is completely digital. So we are able to provide an underwriting and a disbursal decision on a real-time basis, 24/7. And that's only possible because the entire decision-making process and the minus the video KYC process is completely enabled either using an ML platform or an AI platform. Okay. So yes, I think some of my co-panelists spoke about the points, or some of them could be overlapping with the conversation or the comments. Some of them have already passed. But AI is here. Of course, we have to be very cautious around the usage of it. But as far as Zype is concerned, we are using it from a funnel, like how George said. We are looking at it from a approval standpoint, from a credit standpoint. And then post dispersal, we have our entire collection management happening using AI bots as well. So the pre-due, the post-due, the early warning signals are all coming from usage of AI bots. And then our services, which is basically the first-time responses over emails, and then also the calling which comes in is all absorbed using the first AI bot. And of course, if the AI is not able to solve it, then there's a human agent to back that up. And I think like how some of the other co-panelists also said, that we see AI as an agent to the agent, so that it can provide more sophisticated and more on-time support to the consumer, and can enable faster responses, faster resolution, and making sure that the consumer is satisfied at the end.
Lovely.
So yeah.
So I think the biggest takeaway I'm taking from here is agent to the agent. I think that's so beautifully worded, because I think over decades, whenever there has been a new evolution of technology, right from the industrial revolution that happened, then to the internet, we've always heard about computers will replace human beings, right? Never really happened. And now we are always talking about that, will AI replace human beings again, right? I think we all want to believe in the human power, that it's not replaceable. But I think what you touched upon is it's an agent to the agent. It's for better efficiency. So Anujeet, putting on your credit and risk hat, right? Do you really see that? And you spoke about the use of AI in underwriting. How are you seeing the definition of risk credit underwriting change in this new world of AI? And do you see that replacing your credit underwriters, your risk agents? Do you see them being supported further with it?
So I think the real true answer is I think they're going to complement each other. I don't think they're going to replace. We're still not in that phase where discretionary, the human interface in terms of lending, really knowing, in terms of judging for, certain ticket sizes, perhaps, you can have an AI agent replacing a human being. But I think as the loan ticket sizes become larger, you need that some bit of human interface, right? You need that some bit of human judgment. So I think my view is, I think something which is very, very routine, something which has got historical data back, those are things that perhaps, AI can replace. Maybe loans up to certain ticket sizes can be completely automated. And I think that's already happening today, right, where it's completely automated. But larger ticket loans, asset-backed loans, where there's an angle of, valuation, all of those. I mean, there's still a large enough play, perhaps, for human agents or human beings kind of being in there and influencing a credit decisioning.
And so what you're saying is, you are not reducing your hiring budget for credit underwriters just
Up to
yet.
certain ticket size, maybe.
But not just yet.
not just
just yet.
I think it's still a wait and watch.
And while you did mention that, of course, for certain larger ticket size financing, structured financing deals, there's a lot more human intervention required anyways. But are you seeing at least some early signs that for thin file underwriting, for new to credit customers, for smaller ticket size, are you seeing that turnaround with underwriting a little faster?
I think so. A lot of data points which are helpful. I think there is information that's coming in from your devices. I think there's information coming in from your spend patterns, all of those which are helping or enabling underwriting. I think we've got a co-panelist here who kind of completely rely on those information, build a business rule engine over it, perhaps to kind of define and underwrite these customers. I think where I am coming from is I think there's always a risk appetite in terms of what's the appetite that you're comfortable with, perhaps being completely automated through a AI agent versus you requiring a human being kind of looking through stuff. So my view is, I think from whatever that we've seen, I think time, of course, as time passes, perhaps that risk appetite is bound to increase. And I think in the current shape or form, there is appetite, but it's limited to perhaps smaller ticket loans.
Got it. Interesting. And I have to add and chime in here that, even for us as a business, we've of course not cut or reduced our budgets for the number of underwriters we're going to hire next year. But what we are definitely seeing happen is today my team of underwriters and credit managers come in the morning. They have their files allocated, and we've created a tool called Get DDX. It's open for all of you all to use also. GetDDX.com, small marketing plugin here. But try it, it's free, it underwrites. And what we are starting to see, and Nikhil, this is a dovetail to a question to you and Aishwarya both. Today, my underwriters come, their credit managers assign them files, 10 files for the day. They upload it, and their prelim underwriting is happening as they just get their morning coffee. So in 10-15 minutes, they at least have the prelim CAM document and a proposal document on what top of which they start working further. So early adoption, smaller ticket sizes, it's absolutely there and it's being used. But Nikhil, tell me, as you work with a lot of folks in the BFSI space, are they looking, is there a need? Are you being asked where they're looking for how to underwrite basis alternate data, what kind of different analysis, what different data points, whether it's AI powered or not, but is there a need and an ask for something like that in the LOS journeys, in the underwriting journeys?
Yeah. So, for example, if we're taking, the MSME segment, um, on one side, something like a sole props, if you're looking at, let's say, income tax records, right? Sole props don't really want to show income in ITR. So that becomes not a good data source necessarily. So ITR is great for salaried folks. ITR is great for, let's say, private limited at a certain scale, but it's not great for that middle segment. Similarly, you look at GST records, again, great for a particular segment. So I think the common theme we are trying to see now is that now that access to data has been democratized to a certain extent for, let's say, a lot of these first party financial data sources, the next step that we're seeing is everybody is focusing on effective triangulation of these data sources. How do you bring them together? How do you achieve the right sort of outcomes and signals from these data sets? And slowly there are companies in the market who are also offering some alternate data around, let's say, device history and a few other areas. That business model again is going through its own disruption with the whole data protection act now. But interestingly, we are also seeing still these models get picked up where we see new SDKs, new changes coming to us as well that can our models incorporate some of these signals. So
Understood.
that's I think what we're seeing.
But what's probably happened is in your 6-year journey, now at least your sales pitch is easier, and they are listening more than they used to 3-4 years ago, because it's probably the need of the hour at least.
I would say last 6 months things have really picked up.
Lovely. And Aishwarya, you have to do a little bit of crystal gazing. I think you established that early usage around customer experience, quick analytics, personalized offers, all of that done. Where do you see the next requirement, or where are you as a business investing for your banks, for your customers, where you're going to try to use a lot of this efficiency that these tools bring in?
Thanks a lot, because it's also a product plugging opportunity.
Of
We
course,
as
I have to make
founders
sure.
love it, don't we? So we have built AI labs. See, I was just reading an HBR article the other day on AI agents, right? And they said, treat your agent like a toddler. A toddler will follow single step instructions. Do this, do that. The problem that we are seeing in AI today, if you ask me, is we're all getting too ambitious. We're imagining a world where an entire Taj Mahal with or a Christmas tree with every kind of shining ornament is out there. The better way to deal with AI, which is how Hyperface approaches it, is how do you break it down into independent, smaller problem statements that can really be delivered well with AI. And that's where I think we are a tech company at heart, and in tech we say, right, Bhavik, a deterministic problem is easier to solve versus going out with an open-ended statement. A very deterministic problem, when I'm trying to build a recommendation engine for a credit card using AI, is what are the data sets I will need to understand this customer profile better. Once I have a set of data set, what is the library of card features that I need to build to be able to match it to the data set? Now, suddenly, what looks like a massive project on onboarding, recommendation engine, create 300 types of variants becomes a very manageable problem when you break it down into pieces with deterministic data sets. And that's what we try to achieve with AI labs. Instead of going and telling the bank, we will give you 30% lift on your portfolio spends this month, we say we give you a tool to schedule your campaigns more effectively. We give you a tool to run data cohorts very effectively. So build smaller pieces, everything is built with a few bricks.
So
So our approach to AI is breaking down the problems into modular units, solvable using AI, and build them on top of each other, stack it up.
got it. So define a very clear problem and then just build better efficient way to solve that particular problem.
Deterministic data set to operate with the problem. That becomes very, very important.
Everybody who's an aspiring entrepreneur in fintech, please listen to her. And I'm not only supposed to, as a founder, I'm not only supposed to give my panelists the plug-in opportunities. I'm also a moderator to make sure that business happens on stage as we speak. George, this was her pitch, so you have to make sure that either you become a customer to Hyperface sooner than later.
We'll explore some.
but no, on a more serious note, or you built a business really banking on the fact that it has to be a digital journey, it has to be instant. And how are you balancing, and this is very interesting, how are you balancing growth with all this efficiency? How are you balancing growth, or how are you optimizing for growth while a lot of this noise around AI? I mean, it's also the playing field is getting more leveled, right?
Yeah, it's pretty tough question. So overall, automation doesn't mean AI. So like Anujeet mentioned, we like playing much smaller ticket, and we have 100% of our underwriting automated. We don't do any manual underwriting, but it doesn't mean that it is kind of AI driven risk engine. It is more like a scorecard and the rule based risk engine. But of course, we're introducing on a monthly basis some, let's say, improvements to the scorecard. We're testing some new segments, and many of the data, I mean, initial hypotheses, they are driven by machine learning. But of course, we do testing on a small segments because we cannot afford just to run it across the whole funnel. And once we see that the results are promising, I mean, the payment behavior is fine and so on, yeah, we can scale it up across the whole portfolio, the whole funnel. But definitely, we're very cautious with kind of AI on the risk side because to make it responsible, we should responsible means that the customer is not overloaded with a debt. Because frankly, of course, we want to give you more, but we want you to pay back. This is the balance. That's how I understand the responsible lending, and that's why my risk team is doing those, let's say, manual reviews of whatever is built on machine learning side.
No, that's the punchline. I think George said it very well. That responsible lending doesn't mean just giving more. It's about making sure that it's the right amount that they can also afford to repay back. And Yogi, you and me had a nice, interesting parallel conversation, and you've been building a platform that's also fully digital, automated. It's offering a more of an instant experience. It's only in this last year and a half that AI in the consumer space has picked up, or we as consumers or customers are using it. But it's always existed. Aishwarya will agree with me that we've always used, predictive AI, and all of these were always around. But from a very realistic perspective, and I think we are hearing George also say that we will not rely, it's automated, it's digital, but we are not relying underwriting on pure AI and machine. But what are the areas that you're really confident? You touched upon some of them that you use already. Talk us through a more reality picture that as an operator, the kind of digital experience you're giving to your consumers, where else are you seeing that efficiency can be ticked in a responsible manner?
So look, I think one area where the AI has been able to prove itself is on the collection bit, and we have an AI sort of a team inside the inside the company, which is like an AI lab of sorts, which is constantly looking at how do we create bots to either do pre-collections or post-collections. And I think that little piece within the company is like a startup by itself, because there are companies out there.
These are voice calls for
They're voice calls. Yeah. So these are not just IVRs. They are conversational bots. So basically, it helps the consumer to understand that why paying on time is important. So sometimes these are educational calls to certain cohort of our customers, and these are and what we do is that we don't have a process where every single customer is treated like the same. So we have cohorts of customers which are different from each other, and then you develop your AI bots in cognizant with that, right? So I think one area where I'm very bullish in the entire financial services ecosystem is where AI can create a lot of value, not just for the lenders but also for the consumer, is on the collection and the consumer services side. So on collections, what we have been able to do as a company, as I said, we have been able to put a conversational bot which is on pre-due, which means that even before the collection is due, we have educational conversations with certain cohorts of customers which are coming to us as a first time, or maybe their first time as a borrower itself in their life, and then sometimes post due to collect money when the amount has become due, and then on the consumer services side. So I think that's one part of our business and overall on the financial services ecosystem where I think AI can have a very meaningful impact.
Got it. And I know the host is already, chiming in, because probably we did a decent job and we lost track of time in the conversation. So I'm going to wrap up. Yeah. Don't worry. I'm definitely going to wrap up very quickly and if they allow time for a couple of questions. But I think I'm just going to quickly summarize what we are starting to see. And I think the biggest takeaway for me as well, even though we are all in the space, is that how different players are starting to adopt this and seeing very different use cases evolve. I think, Anujeet, you spoke about, yes, that you're absolutely improving a little more efficiency in underwriting. That one underwriter who could do 3 cases in a day probably is doing 4 or 5. So the efficiency is going up. I think George mentioned very interestingly that using these tools for conversion, right? To make sure that if there is already a pre-approved case, can we convert and move that bucket to disbursement very quickly? I think Aishwarya laid it out in saying the customer experience bit, right? Giving more personalized offers, customized offers, and being able to drive some of that. And I think, okay, lending without the right collections. So I think the use case on collections and wherever human intervention can be reduced and efficiency can be built. So I think that's a little bit of a summary, which should leave all of you with saying there's still a lot of room for innovation, a lot of different problem statements that can be solved. Just very clearly define that problem that you see in the entire lending experience. Pick a problem and solve for that really well. Right, Aishwarya? I think that's what we wanted to kind of sign off with.